Welcome to Retiring Well. We've got a lot of great topics lined up for you, starting off with long-term care. It's a growing concern, and how does it potentially impact your retirement plans? Jack will be talking through this 20-question game. I know he's got young kids, but I'm guessing these questions are a little bit different, more applicable to those retiring. And then Nick will be talking through what is a pension buyout. If that's an offer that's been put in front of you before, what are some of the thoughts or questions you should be asking there? And then Ashley will talk through sort of the banking world and how it correlates to the market. So all of this and a whole lot more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Let's have a very sensitive conversation here, John, about a topic that not many people love to get into, but it's definitely something you want to at least be having a discussion about pretty much no matter what age you are, and that's long-term care. This idea that at some point in your life, your spouse's life, the loved one's life, that you may end up in some sort of an assisted living, long-term care facility, and how do you pay for that?
Yeah, so true. As you look at all the different studies out there and you see percentages just keep going up and up and up of the number of folks that end up needing to have some type of assistance. I mean, obviously you hope that, well, maybe you can bring somebody in home first but then beyond that, then really you start to see those costs go up. And some people have sort of, as a recent meeting with a client that we've known for a number of years, her husband's in a position here at Munson Hospital where it looks like maybe he'll be moving on into some type of assisted living or nursing home. And she sort of said, well, some friends were sharing how, you know, their loved one passed away before it got to that point, and almost in a way that was easier. And it sort of struck me with that.
Absolutely. You know, conversations that we have, you know, I think people jokingly say it, but then there's thoughts of that as, you know, the long-term care in some cases, if it's, you know, where they're not getting better, some people kind of almost talk about that's worse than actually passing away. And then sometimes I can see that emotional strain on clients and their families where they have this loved one that's in these facilities that's probably not going to return home, whether it's memory care, whether it's physical, whatever that may be, and just the end of life struggle where it goes on to that, you know. And so from that emotional and that side there of that sadness of going in there, but then again, what does that look like for the surviving spouse, for the family, and making sure that loved one has the best possible care during that time of need, in different ways to try to, I guess, plan to have that if that is to happen to you.
Yeah, and you're seeing the costs continue to increase, whether that's in-home care or assisted living or nursing home, and so you get into some pretty surprising numbers when it comes to the overall costs, and a lot of folks sort of look at it, it's maybe just you can't afford it, or how do you start planning for like Medicaid types of situations. And so there's a variety of different ways to go about it, but maybe Art, if you can dive into some of the different types of tools that are out there to try and help cover the costs of long-term
Yeah,
care.
absolutely. It's a great point. You know, here at Centennial Wealth Advisory, you know, we have people come in. There's no cost, no obligation to sit down and talk through this with us here and at least learn your options, right? So maybe the one thing that people, I think, commonly there's a perception out there is this long-term care insurance, kind of traditional long-term care. I call it use it or lose it in a way. You're paying a premium, whether it's monthly or annually, and you're going to provide coverage. Generally speaking, they pay very well, but you have to be insurable to get that. And then there's a danger. Some of these plans have increasing costs as you age. We saw a gentleman, longtime client, had this policy well before coming to us, but basically he was seeing like 80% price increases at some point as he was aging. He's like, I can't afford to have this and I can't afford to get rid of it. What do I do? Some of the other options kind of are a hybrid policy where you're getting into like life insurance type product with this long-term care insurance product built into that, to where if you were to pass away and not need it, your heirs get some sort of benefit to that. And then really, there's different types of annuities that have long-term care riders associated with them that offer different funding options as well if you end up in that situation. So I think when I think of this, Johns, there's lots of options out there. It's just educating on what may or may not be appropriate for the individual.
Right, and obviously as you go through those, there's obviously then different costs that come along with those different types of accounts, and you want to make sure that you're talking to a qualified insurance professional that knows the ins and outs of those and ultimately shares with you, hey, here's what the costs would be if you wanted to go down that path. But the biggest thing, Art, I think, is just starting the conversation. As Art mentioned before, we have a team here that looks at all those different avenues for retirement planning, whether that's using your existing investments to potentially cover those rising costs of long-term care, or is it going down different paths with the insurance companies? So yeah, there's a no cost, no obligation opportunity for you to sit down with us and just have that conversation. Begin planning so that you're well prepared if that situation arises for long-term care.
What is your plan to not run out of money? Is your SAFE portfolio actually safe? Are you prepared for the fundamental transition to retirement? What are the benefits of tax loss harvesting? Do you have a local financial planning team? You have questions? We've got answers. We are Centennial Wealth Advisory, financial professionals, specializing in retirement planning and serving all of Northern Michigan, with offices in Traverse City, Gaylord, Petoskey, Cadillac, and Manistee. If you are retired or nearing retirement, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. Call 888-608-5825 or register online and choose the date and location that works best for you. Tuesday, July 15th at Lakeside Charlie's in Cadillac. Tuesday, July 15th at the Stafford's Perry Hotel in Petoskey. Wednesday, July 16th at Treetops Hunter's Grill in Gaylord. Tuesday, July 22nd at the Blue Pelican in Central Lake. Or Thursday, July 24th at Bluefish Kitchen and Bar in Manistee. The live event starts at 6:30 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and tends to fill quickly. Call 888-608-5825 or register online to reserve your seats today. Don't miss this important live event to help you plan to retire well. After more than a decade of stock market growth, volatility jolted investors back to the harsh reality of occasional market pullbacks in the investing cycle. Download our free white paper, Navigating Market Volatility. It's all about perspective, for an in-depth analysis of historic lessons and time-tested investment strategies. Simply go to sen-wealth.com, scroll down and click the link Navigating Market Volatility. It's all about perspective to receive your free copy of this valuable and informative resource.
Welcome to this segment, the 20 question game, how better questions can lead to better answers. So I don't know if you've ever played it, but basically...
Nope, not yet.
Not yet, okay.
It's going to today, though. We'll see.
There we go. So yes, that's a good point. Let's wait until after the show, and then you should play this game. Seriously, you just got to find somebody. And how it works is you think of something, anything you want, anything that pops into your head, lock it in, and then that person across from you has 20 questions, yes or no questions, that they can ask you. And at the end of those 20 questions, maybe even sometimes before, if they ask better questions, then they get to guess what it is that you're thinking about.
Got it.
So when people come into our office, a little bit of like what we're doing is we're kind of playing the 20 question game in a sense, where we want to ask enough questions to understand what they're trying to accomplish and help maybe guide them to really good solutions. But we don't really, we don't have a lot of time always to, ask such in-depth questions that will last, hours and hours and hours. I mean, you're talking about trying to get caught up on somebody's life, right? And where they've been and where they're trying to go. And you have to do that in a way that is efficient. And so what I've learned is that if you can ask better questions, you actually get better answers. Like, here's a quick example. I could sit here and I could say, do you want to retire? Yes. Okay. Well, maybe a better question might be, how do you want to retire? Now, as people start answering that question, they start opening up, and it's an easy question because they've thought about it a lot. Then what happens is I get better answers. I can give better answers. We can help more. So, as you're coming across different things in your world, Joe, as people come in here, do you have any, maybe on the investment side, where you've learned that better questions can give you better answers?
Yeah, I think about in the investment side of things is a lot of this stuff is very subjective. When I throw out words like moderate, aggressive, conservative, they mean something different to everybody. If someone asks me what type of investor I am, I would say aggressive. I used to work at a hedge fund. My definition of aggressive is probably very different than your definition of aggressive. Same thing when we're talking about, diversification. A lot of clients will come in and I'll ask, just share with me what you're invested in. Well, I'm diversified, and immediately get defensive. And it's not a question that I want you to be defensive about. I'm trying to understand what you're invested in. And the reaction is, well, I have mutual funds. It's like, okay, well, that wasn't a great question, because now we need to dig into, well, what's inside of those mutual funds? And a lot of times we're not diversified, is we have 3 mutual funds that we think we're diversified, but they all do the same thing. So it's a challenge a lot of times getting past some of these shop talk, if you will, that we need to kind of, I don't want to say get into the weeds, but kind of get behind the scenes a little bit and see what's actually in these portfolios. What is your risk tolerance? Taking that questionnaire, having some visuals a lot of times is helpful in these types of things to give some framework to what we're actually talking about.
And then being able to package it and deliver it back.
Right.
And we have some different tools, especially just specifically on the investment front, where when we can ask, okay, what does something like a risk score number mean to you? Right? And what does that look like? And so as we teach them some of these tools, one system that we use is they put a scale of the investment from 1 to 99. And so then what they can do is we can look at their statements, we can look at those mutual funds, and we can narrow down where on that spectrum from 1 to 99 that particular investment is. And we can do it for every single position. So how does knowing that kind of information might help have us ask better questions?
Yeah, I think it comes back to, I think with that system is it gives us some visuals, and we start to kind of framework it up. I use the analogy of like a speed limit. If I'm in a 1, I'm in a parking lot, but if I'm 99, like Bitcoin, I'm probably going way too fast. I'm going to get a speeding ticket. But as you get back to the questions, it's starting to framework like what you're actually comfortable with. At what point do those investments, do you pull out of the market completely? And actually putting some visuals and measuring that, showing the impact to your portfolio, is we can actually see what would happen to gauge what you really are comfortable with, as opposed to just saying I'm aggressive or I'm moderate, as an example.
Yeah. And so funny little story, maybe I can go down this quick little rabbit hole, is, I was driving home from Detroit with my family and wife, and we were in a conversation, pretty, intense conversation about life stuff, and kind of, wasn't paying attention. And I ended up going through a construction zone, and I was going too fast. And I got pulled over by a state trooper, and they came up, and she was, said, "Hey, were you aware of what you were doing?" And I said, "I am so sorry. No, I had no idea that where I was at. I was, my focus was somewhere else." And we see that all the time in a financial standpoint, from what people are doing, and they have no idea. We get to help educate. And so I just want to say, the Michigan State Police, how you handled that situation with me was incredible. I have a super clean driving record, and she kept it that way, and I was so thankful. And so anyways, if you're sitting there and you're like, I just feel like I need some questions, and we can ask a lot of good questions that might help give you really good feedback, obviously you can reach out to any of our offices. We love to educate, and we appreciate you watching.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
Pensions. I know they've kind of gone by the wayside, but some people do have those pensions. Now, most people, when they think of pensions, they think of that lifetime monthly income, and you're not wrong with that. But you actually do get typically some options to choose from when you go to elect what pension you actually are going to get. And that's what I want to talk about today. We're going to start with the first option, which is the most common. It's called a single life annuity. This one is just going to pay those monthly income for as long as the pension recipient lives. Okay? Once that pension recipient passes away, that monthly income is gone. This is the most common pension election and what most people relate pension income to. However, it might not be the best for every single person. Okay? This is probably best for the single person that has no legacy plans whatsoever. But if you have a spouse or a family that you want to leave money to, this might not be the best option for you. Thankfully, most of these pensions, they have other options that you can select from. And that would be option 2, okay? So option 2 is called the joint and survivor annuity. This one allows not only the pension recipient to receive income, but when they pass away, a joint survivor can continue on that income for as long as they live. Typically, there's some other options there to consider as far as different payout amounts. You can do 100% survivorship, where the surviving spouse, as an example, would get 100% of the benefit. Other times I've seen it where you can get 75% of the benefit or 50% of the benefit. And typically when you do it that way, let's say you do the 100% benefit, that payment's going to be a little bit lower than if you selected the 50% survivor benefit. Okay? But when you go with a joint and annuity benefit option, the payout is going to be a little bit lower than if you went with that single life annuity. And then the third option is called a period certain annuity. Okay, this one works in a unique way in that they pay you that monthly income for a specific period of time. And usually there's some options to choose from within that option, and that's either a 10-year, a 15-year, or I've seen it even as long as a 20-year period certain. And how it works is essentially the pension recipient starts that monthly income, and then let's say that that pension recipient selected the 10-year period certain and passed away in the 5th year. Well, the beneficiary or the spouse would then be able to get those benefits for the remaining 5 years of that 10-year period certain. Okay, so this would be a good benefit for someone that maybe wants to leave a legacy over a specific period of time, or they have a spouse and they want to make sure that that spouse is getting the payments over a specific period of time. Now with this pension benefit though, you have to remember that once both people pass away or that period certain is done, let's say it's that 10-year example, then there's no money to be left for those beneficiaries at that point in time. And then the final option, which is a very, very common option, is the lump sum payment. And basically what this option is saying is, hey, instead of taking the lifetime monthly income, we'll give you a lump sum payment and you can do whatever you want with it at that point in time. Okay? Now, some people, they get concerned with this, saying, hey, if I take a lump sum of money, isn't that going to be taxable all at that point in time? Well, it could be if you put it all in your pocket, right? But you do actually have some options within that as well, where you can roll the lump sum to an IRA, and then you can invest the funds however you want at that point. This is a very common option because a lot of people, they want the control of their pension to be able to invest in whatever products they want. And then they also want to be able to leave a legacy, okay? So with this pension lump sum option, it allows you to invest the funds, but let's say after 2 years go by, and you pass away, unfortunately, well, that money, that lump sum of money, would go right to your beneficiaries or whoever you name to inherit those funds. So not only can you control the assets with this option, but you can also leave a lasting legacy this way in comparison to like a single life annuity pension option. So if you're one of the lucky ones that have a pension and you have all these different options to choose from, don't make this decision alone. Please schedule a free, no obligation consultation where we can help you determine what pension option is best for your situation.
After more than a decade of stock market growth, volatility jolted investors back to the harsh reality of occasional market pullbacks in the investing cycle. Download our free white paper, Navigating Market Volatility. It's all about perspective, for an in-depth analysis of historic lessons and time-tested investment strategies. Simply go to cen-wealth.com, scroll down and click the link Navigating Market Volatility. It's all about perspective to receive your free copy of this valuable and informative resource. What is your plan to not run out of money? Is your safe portfolio actually safe? Are you prepared for the fundamental transition to retirement? What are the benefits of tax loss harvesting? Do you have a local financial planning team? You have questions? We've got answers. We are Centennial Wealth Advisory, financial professionals, specializing in retirement planning and serving all of Northern Michigan, with offices in Traverse City, Gaylord, Petoskey, Cadillac, and Manistee. If you are retired or nearing retirement, we invite you to an informative live event to help you plan to retire well. There is no cost and no obligation, and dinner is on us. Call 888-608-5825 or register online and choose the date and location that works best for you. Tuesday, July 15th at Lakeside Charlie's in Cadillac. Tuesday, July 15th at the Stafford's Perry Hotel in Petoskey. Wednesday, July 16th at Treetops Hunter's Grill in Gaylord. Tuesday, July 22nd at the Blue Pelican in Central Lake. Or Thursday, July 24th at Bluefish Kitchen and Bar in Manistee. The live event starts at 6:30 p.m. and is free to attend with a complimentary gourmet dinner to follow. But seating is limited and tends to fill quickly. Call 888-608-5825 or register online to reserve your seats today. Don't miss this important live event to help you plan to retire well. Centennial Wealth Advisory is expanding, and we are excited to add a new office in Manistee to better serve our growing family of clients. Our new office is located in the historic Briney Building in the center of idyllic downtown Manistee. Whether you are an existing client or would like to meet for the first time for your free, no-obligation initial consultation, we look forward to welcoming you in our new office or at any of our Northern Michigan locations in Traverse City, Gaylord, Petoskey, Cadillac, or Manistee. At Centennial Wealth Advisory, we specialize in retirement planning with a holistic approach that includes income planning, tax planning, investment planning, healthcare planning, and estate planning. We'll never pressure anyone to become a client. We believe in providing quality financial education, as presented in our locally produced weekly financial television program, Retiring Well, currently in its 14th year and airing on all major networks in Northern Michigan. Whether you're in the Manistee area or anywhere in Northern Michigan, we'd love to hear from you. If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Today, we're diving into a topic that affects every consumer, every investor, and business owner, and it's how the banking world correlates to the broader market. Now, banks aren't just institutions where you can cash your paycheck or you get a mortgage from. They're actually arteries of the economy, and when that artery clogs, it could be detrimental. So let's break this down into digestible pieces and get a better understanding in what to look out for. So first off, banks are often the leading indicator of the economy, and typically markets will follow. And why is that? Because banks are the front line of lending. And when banks tighten up their lending standards, then businesses can't expand, consumers don't consume as much anymore, and borrowing is less. That in turn can pull down across all sectors. And as we know, stock prices often follow. So basically, when the banks are healthy and thriving, this will stimulate growth in the economy and confidence. So here's a real-world example. Take a look at 2008 financial crisis. This began in the banking sector. And the Lehman Brothers collapsed, credit was frozen, and the stock market plummeted. Let's fast forward to the pandemic, 2020, I think it's 2021. And you'll see the Fed, along with the central banking systems, they came in, they propped up the banking system, and the market was able to come back a lot quicker than back in 2008. So if you'd like to hear more on this topic and other topics, please go to our YouTube channel. We'd love to offer you some free information. It's very educational, and I think you'd like it. So next, we can't talk about banking without talking about interest rates. This is the #1 profitability factor for banks. So banks earn money through their net interest margin, which means the difference between what they pay on deposits and what they earn from loans. So when rates rise, this margin often expands. Good for banks and typically bullish for bank stocks. But rising rates can also spook the broader market. As borrowing costs increase, future profits are discounted more heavily. On the flip side, the rates fall, borrowing gets cheaper, stimulates the economy, and it can compress bank profits. My experience with Centennial Wealth Advisory and our clients, of course, the last couple of years have been great for interest rates, and so they were very happy with having minimal to no risk there. But where's that sweet spot where the economy is doing well, the market's doing well, banks are doing well? That is gradual. That's right when gradual rates increase alongside a stable economic growth. So if you're building a diversified portfolio, feel free to give us a call in any of our Northern Michigan locations. We're happy to give you a free consultation and talk further on this topic and other topics that you'd like. So lastly, we need to talk about bank regulations and risk management. Especially with today's interconnected world, events like the collapse of regional banks in 2023, that kind of scaled back that trust on banking world. The moment confidence slips, withdrawals increase, and liquidity dries up. So markets react swiftly to this. Regulations like the Basel Accord and the Dodd-Frank, those are designed to mitigate some of that risk there. And we also have in place the FDIC insured, that's backed by full faith and credit from the United States government. So if you have certificate of deposits or you have a high yield savings account, you are covered there. So stay informed and definitely watch the news, but watch our TV show. We have many good tidbits like this information and others alike. So to wrap it up, the banking world isn't its own separate ecosystem. It's actually very intertwined with the broader markets, with everyday financial lifestyles as well. So thanks for tuning in. I hope that you've gained something from this. And if you have, definitely share with some friends and go to our YouTube channel again and subscribe. And I'll see you later.